Hey everyone, welcome back to Corporate Decoder, the place where we peel back the curtain on corporate filings to see what is really going on behind the numbers. And today we've got a bit of a surprising move from BTCS Inc, to say the least. This is a Form 8K filing, and what that means is companies use this to announce big news. They do not want to wait for their regular quarterly or annual reports to tell everyone about major events that could change how investors see the company. And BTCS is definitely dropping some interesting news here. So BTCS is a company that has been in the crypto space, and it looks like they are making a significant financial move right now. They're not just talking about crypto, they're talking about real world debt and how they're addressing it. Here is the headline right here. On the 5th of February of 2026, BTC sold 10,000 ETH, which is a cryptocurrency, for a cool $18.7 million. That is a lot of Bitcoin Ether, or whatever you call it, moving to cash. Now, what did they do with all that money? They used it to pay down some debt. Remember how I said this filing was interesting? They had some outstanding principal. Debt on a platform called RV, which is a decentralized finance platform for lending and borrowing, and they just paid down a chunk of it. Now this is where it gets a bit more nuanced. They paid down $18.7 million, but their total debt on RV is still a whopping $43.8 million. This means that while they made progress, the company still carries a substantial debt load. This is a key detail people forget when they see a company announce debt repayment. They might think the problem is solved, but in this case it is more like they treated a symptom, not the whole illness. Let's quickly look at how BTCs is structured. For context, their main thing is common stock. And this is what people usually buy when they invest in a company. And good news for those investors, their common stock is traded on the Nasdaq stock market under the ticker symbol BTCs. That is where you'll find it if you want to check its price on any given day. Now, BTC is also marking itself as an emerging growth company. This basically means they are a newer company and get to follow some different and often simpler rules for financial reporting compared to older, more established companies. This can be good for flexibility, but it also means investors might get less detailed information. Sometimes this filing falls under what is called other events, which is pretty much a catch-all for important information that does not fit into the other standard categories for these reports. So they are using this 8K to tell us specifically about this ETH sale and debt repayment because it is a significant event. And here is the signature part showing that this report was officially filed on the 6th of February 2026. It is signed by Charles W. Alan, the Chief Executive Officer of BTCS Incorporated, this tells us the top leadership is aware of and responsible for this announcement. So what does all this mean for BTCs and for investors? Well, the company is actively trying to manage its debt and is using its crypto assets to do so, selling 10,000 ETH for $18.7 million. Is A. Substantial liquidity event that demonstrates a strategy to become less leveraged or less dependent on borrowed money. This is generally a positive step towards financial stability. However, the remaining debt of $43.8 million is still a significant figure, especially when you consider the volatile nature of cryptocurrency like ETH if the price of ETH were. 2. Drop significantly in the future. BTCs might find itself in a more difficult position to cover its debts or even to raise more capital for now. They are reducing their exposure, which is smart, but the large debt balance remains a considerable risk. They are essentially playing a game of financial whack, a mole, trying to keep their debt under control while navigating the unpredictable crypto market. The company says direction seems to be focused on strengthening its balance sheet by converting volatile crypto assets into cash to reduce liabilities. This is a pragmatic approach given the risks associated with holding large amounts of cryptocurrency for a publicly traded company. The challenge for BTCs will be to continue this debt reduction while also finding ways to grow its business and generate more stable revenue streams that are not solely tied to crypto price fluctuations. What is notable here is the company's reliance on crypto assets to manage traditional financial obligations. It highlights the unique intersection of the cryptocurrency world and traditional corporate finance. It is a high wire act, and BTCs is making a bold move to secure its footing. Now, looking at this filing more broadly, BTCs is clearly trying to de-risk its financial position by tackling its debt head on. The sale of ETH shows they are willing to realize gains and convert those into debt reduction. This is a strategy that can pay off if they can continue to manage their liabilities effectively, but the sheer size of the remaining debt means they are far from out of the woods. They need to continue to execute on this deleveraging plan and hopefully find new avenues for growth that do not depend so heavily on asset price movements. Alright, that is our breakdown of BTCs Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.